I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website's pifinancial.com and polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me on, Jim.
Boy, markets around the planet very bumpy. What's driving all this volatility?
In my eyes, over the last couple of weeks, we've had two key ongoing issues. The one that continues to drag out has been U.S. trade issues, and this just isn't a Canadian-U.S. issue. It's U.S. global that makes it really such an issue, and we can come back to that in a bit. And over the last 2 weeks, the bigger issue, or the issue more at the forefront in my mind, was the Italian issue. So this was a political, economic issue with what was going on in Italy. And I mean, over this time period, we had U.S. rates, which had reached a high, 6-year high of 3.11%, dropped all the way back to 2.75%. As capital was looking for safety, so it came back into safe assets like U.S. Treasuries. We had the Italian 2-year bonds go up over 300 basis points against German bonds. So again, a flow into German bonds and out of Italian bonds very quickly, just as the marketplace really got concerned that the new ruling party, or people coming into power in Italy, I mean, their election was quite some time ago, but again, with the coming to power of a merged government, that we would see them wanting to pull out of the euro currency and cause other issues in the economic zone. But then, just really in the last week, we really saw that sort of kind of dissipate.
Do you think the problems in Italy are going to go away?
No, I definitely don't think they are. I think what we're seeing right now is a bit of a reprieve at the moment. So the market always sort of rushes to think worst case scenario, and that's where we got the huge blow off move in Italian bond yields. But just because it's coming back, we may have, gone through some of the scarier parts of Italy wanting to leave the euro currency. The new economic minister coming out saying that, they didn't actually talk about that, and they don't want to do that. And that was sort of that fear rush that we saw come into the market. However, they do want to change things dramatically in the way that they're set up. They're talking about universal incomes. The way that they want to pay for that is not very clear. They want to embark on other spending. And then at the same time, you've got the ECB, which over the last couple of days has again helped the euro currency move higher. They've come out and said that the meeting coming up next week will be a quote-unquote live meeting where they will discuss getting out of their bond purchases. So if the ECB is going to stop purchasing Italian bonds, who else is going to buy them? If the ECB is going to stop purchasing German bonds at negative yields, who else really wants to step in if the ECB is not going to be the buyer that's going to come buy them off you? I don't know many people that would want to give the Italian government right now their money and pay them to hold on to it. That just really doesn't make a lot of sense. So this is helping this sort of, as I call it, a reprieve in the markets. I think it could have a little bit more to go. We have the ECB meeting next Thursday, as I mentioned. So there could be some more hope as we go into that the ECB will be moving away from monetary easing that they've been embarking on and will slowly move towards tightening, which is good for the currency. However, I think the market, wants to believe that. I don't know how much we can actually go down that road, again, given some of the issues going on in Italy. And if we do get down that road where the ECB stops purchasing these bonds, then I think we could really see issues in Italy come back to the forefront. So we've kind of had the shock and awe over the last 2 weeks of Italy. We've stuck a few band-aids on it. The political leaders there have been happy to sort of moderate some of the language that we thought we would see out of them. And we've got this sort of a relief rally in the euro, a relief rally in the interest rate space, especially in Italy. The 2-year there is definitely backed off significantly from that sharp run that it had. But again, it's still underlying issues that haven't gone away. And I think as we move away from the monetary easing that the ECB is embarking on, I think we'll see these issues come back.
We'll have more with Drew Zimmerman right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Welcome back. We're chatting with Drew Zimmerman. Drew, the White House says it's thinking about even more economic penalties against Canada because we plan to retaliate for their tariffs on steel and aluminum. Why is there a drive to add tariffs when right now the U.S. has more job openings than it has people to fill them?
That's a very good question. And if I knew what was going on within Donald Trump's head, I would be in a much different situation than I am now. It's interesting to see where he comes at these problems and the tactics he chooses to employ to so-called, make America great again is his overarching statement. And he believes, and as do I, that he was elected on the sentiment that, he was going to bring jobs back to America. And yes, you can argue that the American labor market is drummed tight right now, the unemployment rate at record lows. So, why do you want to start these trade wars is a very good question. And Larry Kudlow was out today. That's his one of his advisors saying that it's more of a skirmish at this point. But again, I think that we are actually getting closer and closer, if not already at, a trade war status. When they first launched the aluminum and steel tariffs, all the sort of the friends of the U.S. were exempt from these tariffs. So now we had one exemption and then we got another exemption, and on June 1st we assumed, I think, that we were going to get another exemption, and the U.S. almost granted nobody an exemption at that point. So it is really they're sticking to their guns, and it's really escalating a situation that I think many of us thought would have been de-escalated and or dealt with by now. And whether that's a negotiating style that some people argue it has been, that he wants to add these tariffs to get the NAFTA deal completed. We're also hearing rumors that he wants NAFTA to get dropped and he'll form bilateral trade agreements with Mexico and Canada separately. So I really don't have any further insight into why he does what he does. It doesn't seem to make a lot of sense, but he's doing them anyway, and we just have to try and see how that will impact markets, and what will come of it. 1 week, 2 weeks, 6 months down the road.
We'll have more with Drew Zimmerman right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. On the weekend, Drew, the G7 is going to be meeting up in Quebec. But people are saying it looks like it's going to be the G6+1. Do you think they'll be able to talk Donald Trump into saying that free trade is the best way to go?
I hope it's going to be a constructive G7. A lot of the time when we see these G7 meetings, we don't see anything immediate come right afterwards. However, when things get done, a week or two later, we can point back to what was hopefully a constructive conversation at the G7 meetings. So he's definitely sort of going into hostile territory right now, not only against Canada, but against the other G7 members. But I think by going and by having constructive conversations with the other global leaders of the G7, hopefully he can work towards something that gets us moving in the right direction. Maybe the other 6 leaders sort of as one can push against him. Now, of course, a lot of the big trade issues are with China as well. China not present at G7 meetings. So there won't be that pressure, but the other 6 more quote-unquote friendly nations to the U.S. Will hopefully be able to put pressure on Trump to come around to seeing more benefits in trade and the fact that we can all do better if we trade together.
Are you surprised that gold hasn't done better given all this uncertainty over tariffs in Italy?
Yeah, the Italian situation, I thought we may have seen a bigger rise in gold prices. The tariff situation, not as much. It's just not the sort of geopolitical issue that I think we really see spark rapid gold price increases. But again, even the U.S. equity market really only had one sharp down day through the Italian issue. So it wasn't necessarily a contagious event through international markets. I mean, we had one strong day in gold markets as well. And ever since gold's kind of come down to the $1,300 level, we've been trading either side of it. And there really hasn't been, a big push one way or the other. I've seen it as a bit of a trade-off. As the Italian situation grew, interest rates moved quite a bit lower, which was helpful for gold, but then at the same time, the U.S. dollar was moving higher, which is a negative for gold. And then as the U.S. dollar has been coming off over the past week, interest rates have started to move back higher again. So again, sort of an even balancing act as the pressure's on gold. I do think that even that geopolitical risk premium not getting added in does show us that there's still some weakness in gold. So I am looking for, again, this move higher in rates I think is likely to continue. The U.S. 10-year back to about 3% today. I think that can move higher and get back to the previous highs, if not new highs, which will pressure gold a little bit. And I also think this run up in the euro, which I still think could have a little bit more legs to it. But again, I think that's a bit of a reprieve from the current situation. I think that we may run up into the ECB meeting next week, and then I think we could see the U.S. dollar start to do better again there. So I think once we see those two things sort of teamed up going the same direction, that is a higher U.S. dollar and interest rates going higher, we could see gold have one final leg lower is what I'm looking for in gold prices.
Oil prices have dropped $8 over the past 2 weeks. Is it going to continue to go down?
Yeah, oil prices have been very soft. We've been down 9 in the last 11 trading days, a very sharp drop. There's still been a very large speculative position in crude prices that had built up over the last year as we had a significant rally from the lows at 42, and even in the last sort of 3.5 months as we rallied from 58 to 73. So this spec position just was right, and it just kept getting bigger and bigger and hit record positions and then got bigger some more. So it started to wind down over the last couple of weeks. It'll be interesting to see how that positioning data comes out when it comes out again this Friday. I think there's more unwind that's possible. I do get the sense that, maybe we're reaching a better equilibrium on crude prices. Of course, the thing that started this sell-off was Russia and Saudi coming out saying, we could actually up our production of crude to make way for the Venezuelan crude that's come off the market, and for the possibility that a lot of Iranian crude will come off the market with sanctions going back against Iran. So, in my mind, that really told the speculators, you only want to be buying oil at $73, not because you think it can go to 74, but because you think it can go to 80, 90, or 100. There's a lot of upside. And if they really capped it at those kind of $73 to $75 levels by saying they're happy with those prices, they come out and produce more, then you've got a much different risk-reward scenario where there's a lot more downside for only a little bit of upside. So I think that really turned the sentiment in the crude market. That saw us turn lower. The speculative position should have started to unwind some more from what we were seeing. So I don't see a huge readjustment. I mean, there's no gigantic overhang of crude supplies like there was in 2014. So I think it was just a necessary pullback after the sharp run-up that we had. But again, I think we're going to find some equilibrium prices. I'd be happy if crude stayed, in the $60 to $65 range. So that could imply a little bit more downside, but I don't think it could be as sharp as we've seen over the last 2 weeks.
Will falling crude prices drag down the loonie?
I think it's definitely possible. I think it would take a sharp price drop from here to really impact the Canadian dollar more. There's a lot of other things going on with the Canadian dollar right now. It's almost, hard to measure the impact that each event is having on the Canadian dollar. Obviously, the trade skirmishes with the U.S. Front and center. How are those trade skirmishes going to impact the Bank of Canada, which is then going to impact when they raise rates or when they don't raise rates? That will impact our interest rate differential with the United States, which at about 58 basis points on a 2-year in the U.S. dollar's favor is as bad as it's been over the last several years. I mean, the last time in the last 5 years we were at these levels, the Canadian dollar was at 68 cents or 73 cents. So having Canada up at around 77 cents is high given the interest rate differential. However, that's warranted with crude prices a little bit higher, but it's always a tug of war. And then, of course, we've got the Ontario election tomorrow. So if the most populous province in Canada goes towards an NDP government that is going to be rolling out higher taxes, again, we go back to this anti-competitive sort of nature differential that we have with the United States. Obviously, taxes going lower there, taxes moving higher in Canada, and then, of course, the oil outlook and, of course, the infrastructure side of oil. So even with the federal government buying the Trans Mountain, I mean, that's still 2 to 2.5 years away before any oil moves through that. So we've still got some structural bottlenecks on our crude there's just a lot to keep track of on Canada, and then of course just this general U.S. dollar pressure. I mean, if the U.S. dollar is making big moves, and again, I'm looking for the U.S. dollar to possibly weaken a little bit more into next week, but then if it starts to strengthen again, if the U.S. dollar takes out the 95 high that we saw this past week, then Canada's going to go lower regardless of what's going on in Canada. It'll be all about the U.S. dollar.
Drew, thank you so much for chatting with us.
Thanks for having me on, Jim. I appreciate it.
My guest has been Drew Zimmerman. He's a portfolio manager at PI Financial in Vancouver. His website, pifinancial.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.